Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts and going over data. And so here we are looking at the SoundHound AI ticker symbol SOUN chart. Wanted to do a follow-up on last week's video, which was pretty popular. So just kind of wanted to follow up, give my perspective as I am recording this on Saturday, February 22nd. We can see the trading over the past week here. And basically, before I put any drawings up, I did want to say that it's possible that this was the dead cat bounce that I was talking about last week. And just looking at the chart here, we did get a down move followed by consolidation. That does make me think that this is a bear flag and that it will be breaking lower, potentially to $8 a share where I have this alert. And that also happens to be the 200-day moving average at, it looks like, $8.03 right there. And also, we do have earnings coming up on the 27th. I believe that is next Thursday in the after hours. They will be reporting their earnings. So that could spark either a breakdown to around $8 a share or maybe a bounce from that level or from the current level up to, these moving averages up here. So good to be keeping that in mind. And I should say, forgot to mention that SoundHound closed the week at a price of $10.31, being down 5.5% on the day and continuing down a little bit in the after hours. But I will get into the details of the chart in a minute. I did just want to point out this with the SPY. This is the S&P 500 tracking ETF. I go over this every morning during pre-market prep, sometimes a live stream, sometimes a pre-recorded video. I'd suggest checking that out if you're interested in just seeing what's going on with the market. But what I was talking about the past few days with the chart as the SPY, the stock market, did hit a new all-time high of $613.23 on Wednesday last week on the 19th. And so what I was suggesting I thought would be happening is that what we might be retesting this red line up here, putting in a new all-time high to close the week out at a new all-time high, to then be making headlines and then to rug retail, to rug investors. But what we in fact saw instead was this massive downside move. The SPY coming down, it looks like almost 2% on the day, breaking below these levels that I had talked about, breaking below this downtrend. So clearly there's a lot of panic in the market. But I think that's what the headline is. I believe what I saw is that the stock market saw its most negative day so far in 2025 on February 21st. And so that's what's making headlines. And so I think there's just going to be a lot of panic in the markets, and retail will be selling at these lows. However, we are above the 50-day moving average here at a price of $598.82. You can see it right there. We did close just below $600. And so, I think that, this is basically $600. We're above a notable moving average, and we got one candle break below these levels. I think it's going to be a fake out break, and I think that this will be bouncing to new all-time highs. So effectively, like this arrow that I have drawn here, it just, went a little bit straighter down, went a little bit lower. I still think that we're going to be seeing a bounce. So whatever I talk about with SoundHound over here, it might not be breaking down to the 200-day moving average. It might be breaking out following earnings. Who knows? But, I just wanted to go over kind of an update and just give my perspective on this. And so, I had drawn this falling wedge. Still looks like we're at the base of that, so it hasn't necessarily been invalidated. However, the low that we saw on this big candle day here on the 14th, so on that Monday when we gapped down, sorry, I guess that was Friday last week when we gapped down because we had a shortened 4-day week because of President's Day. Anyways, on the 14th, we gapped down and we hit a low on the day of $10.24. That was the low for Friday the 21st. and we actually closed higher than that. So yeah, I mean, I still think that this trend line is valid. I still do think that we could get a 20%, maybe 15 at this point, percent bounce to test the top of this, which in all honesty, I think that would still be a dead cat bounce. I don't think that we have, gotten to the point of breaking out from this downtrend yet. However, we need a catalyst, and that catalyst might be earnings on the 27th. And so that could correspond with a breakout, but this could also correspond with a breakdown. Another level that stood out to me is that purple line at 1025, which was the high from over here that was on Pi Day, March 14th of last year of 2024. And, I had effectively drawn this as being a cup and handle that would suggest price is going to be going notably higher. However, we may have seen that around $25 a share here. But the thing, as while I have this zoomed out, the thing that really stands out to me as being very compelling, that this would be an excellent dip buying opportunity, is this light blue uptrend. And that would actually correspond to us coming down to a price of around $7 a share, not $8. So if we do see this breaking lower, I think that's going to be really, the time to get aggressive with this. I don't think we're there yet because I think that this could be breaking down. I think this could be breaking out. It's kind of 50-50 at this point, but I would say, especially with what's going on in the market, with this big move down, I feel like there's probably more of a bias to further downside. And I do see that 200-day moving average there at $8, at 803. So that seems like the most likely pathway rather than getting a bounce here. However, earnings, could kind of throw a wrench in that. We could be getting a bounce corresponding to that earnings or, a breakdown. So I just think that the more likely path to this is a breakdown, not a 20% move to the upside. So I just wanted to caution that. I think that we'll be testing 8, possibly 7 before filling this gap up here at 1525. But again, earnings could change that. Lots of volatility around earnings, so very good to be keeping that in mind. And one thing that I wanted to do is do a little bit of a Fibonacci extension that could suggest a level to the downside. And so I'm just going over to the Fibonacci extension, not retracement tool, the extension tool. And so we did have this little bounce here. So I'm going to begin this extension from the high on that day, which was 1543, high of February 13th. Then coming down to this low of, let's see, what was that low of the day? Oh, actually, sorry, the low on that day, I misspoke. I was reading the data from the 21st. The low from, let's see, the 14th was actually $10.40. So we did close below that. So that does make me lean a little bit more on the bearish side. Anyways, just doing this Fibonacci extension, bouncing from there, getting up to these highs that we saw. I believe 1192 were the highs from that bounce. And then from that extension, if we do take a step back, we could see where that brings us to. And that brings us to, it looks like, $6.89 corresponding, with this level that I have drawn here. So yeah, I mean, I really do find that to be a compelling level. And I might actually change the color of that. All of the colors are pretty much arbitrary for the most part. But yeah, coming down to $7. And if not 7, I think 8 seems very likely. Sorry about my misspeaking at the beginning of the video. But yeah, the low over here on the 14th was $10.40. Maybe I want to put a horizontal line there just to mark that. That we did close below that. We did hit a lower low. So that does make me think that this is leaning more on the bearish side, but maybe it breaks to $8 before earnings, and then earnings, we get a launch back in to this falling wedge and a break higher. So good to be keeping that in mind. But I also wanted to look over at some of the data in unusual whales because, this over here, it does look like it is more bearish, bear flag. Like I had said, I do think that the bounce to the top of this is less likely. And what reinforces that bearish sentiment is looking over at the data here in unusual whales. And over here, just want to note that the earnings expected on the 27th are in the after hours. So good to be keeping that in mind. And it looks like the data from unusual whales, the options data, the expected move is around a 17% move, whether that's to the upside or downside. And actually, thinking about that, $1.73, where would that bring us? That would bring us down to in the eights, So that does make me think that this could be to the downside, but that could also be a move to the top of this wedge. So it's really in kind of 50-50 zone. So I think it's good to be cautious with this. But anyways, looking at the premium data here in the volume for contracts traded, this is for all contracts, SoundHound contracts that were traded on the 21st. And so what we can see here, this again makes me feel a little bit more 50-50 than I was hoping. We see more buying volume the first half of the day, whether that's calls or puts, either way, buying here where it's green, but then with the volume over here being red the second half of the day on Friday. That doesn't necessarily suggest that it's bearish. It just suggests that there's more contracts being sold. And if we look at the data up here, we can see the stock price in yellow coming down over the course of the day. And with this selling pressure, the selling volume there, what do we see? We see calls over here being negative, while puts, net put premium, is positive, but then where do we end the day? I think that's the most important takeaway from this. We see the net put premium being up here, but then coming down, closing negative. And we see the net call premium being negative here, but then closing positive. So that makes me think that this is slightly more bullish. However, if we look at the bear bull slider, only 43% majority on the bullish side because of this neutral here. So, it doesn't really have me bending over backwards thinking, oh, this is bullish. I'm really excited about this. I think this is definitely more neutral, and I would say actually leaning more on the bearish side in the sense that we see net put premium being negative. And so if we look at the numbers, actually, I was hoping if I scroll over here, it'd say the day, but since I'm recording this on Saturday, it goes away. So looking at the numbers over here, I'm just going to have the cursor on the data so we can see where it closed at. And actually, I'd have to look at the individual contracts to see it. Anyways, just looking at the numbers over here with my cursor hovering here, we can see that net put premium was down by nearly $200,000. It looks like $191.75 thousand. So that is bullish. That puts are being sold. People are taking profits on their puts. So that's bullish. However, that doesn't make me think that the bottom is in necessarily, or that the rally is going to be beginning on Monday. It just makes me think that the bottom could be starting to get formed, because what we see in net call premium is that's only up by about $50,000, $49.49 thousand up in net call premium versus, basically 4 times that down in net put premium. So that does suggest more bullish, but there aren't whales throwing money into this, which would be in the, I would say millions of dollars, or at least hundreds of thousands, but we actually only see hundreds of thousands being taken out. So that strikes me as this could potentially be forming a bottom or getting ready to form a bottom. I don't think the spicy upside moves are around the corner just yet. So I am being cautious with this. I think it's a good time to be cautious. And then if we look at the data over the past 30 days, we can see the net premium traded on Friday really doesn't stand out over here. We see a lot bigger spikes in the past, but more recently we do see some spikes in net call premium going up by over $3 million on February 13th, but we also see net put premium coming down on that day by over $1 million, the red over here. And so that does make me think there was some bullish activity in the recent past, but what do we see following that? We see the stock price up here, people chasing as they got rugged effectively. So, any of the big buying over here, the $1 million going long either by buying calls or selling puts, those people just got rugged. Even over here, a lot of kind of chasing at the top before this came down. We effectively have a double top in the stock price here. And so, I don't think this looks that great overall. And, if we're looking at this, specifically on the day here on February 13th, and we see this big spike over $3 million going long, buying calls, net premium going up. If we look over at the chart, the 13th was over here, and then we gapped down. And so, people got rugged there. Maybe, there's still some possibility of getting back up there and those people are able to get out of their positions because we haven't seen a lot of net put premium being driven down. We haven't seen millions of dollars going to the downside for net call premium over here. So those who bought here are probably still holding. So there's still some hope there. But another thing that just makes me lean a little bit more bearish is if I do look over at the Greeks here, we can look at the max pain. And so the max pain for February 21st was $13 a share. If we look at the current stock price, we're well below that. We're multiple strikes below $13 a share. And so that's bearish. And if we look at future max pains, they are above where we're currently at. So maybe we could get a push to the upside. But with us closing so notably below the max pain from the 21st and the following max pains all being above where we're currently at, I think that price is still going to be going lower. I think it's going to be getting suppressed because it isn't until April 4th, so more than a month from now, that we're seeing a max pain that is at a price we're potentially right around, we could potentially be getting to. But that's more than a month from now. So overall, considering the max pain data here, considering the overview in the chart, not only looking at the single day here with millions of dollars not going long, looking at the 30 days, nothing really standing out here as being terribly bullish. And anything that did stand out as bullish was effectively people buying the top. And with earnings coming up, I think it's kind of, a little bit too risky, whether to be going long or short. And so for me personally, on this dip here, I picked up a couple shares, only two, in all honesty, very, very small position, just because I wanted to see if this volume here would support a bounce for a 20% swing. Nothing too big there, just having fun with it, practicing my analysis of this volume corresponding with what's going on with the chart and actually being contrarian to what others were saying on X. So, I just wanted to see about this analysis. But with the volume being low as we traded sideways, I think that buyers are going to be drying up. I think that the data from unusual whales, the options data, what we're seeing in the stock chart, and taking a step back, seeing the 200-day moving average at 8, seeing this confluence of levels here at right around 7. And also, I didn't mention it before, but this, macro downtrend here going from, what looks like the all-time high of 1814 coming down to this pivot high of 1025. We do see that downtrend coinciding with all of these levels. So I think that this is coming down to $8 a share, if not $7. And at that point, I will be looking for some data in unusual whales that stands out as being bullish. And then at that point, I would like to go long, and probably pretty heavy long. But right now, I'm just having fun to see if there's a 20% bounce. But I think that more than likely, we are going to be seeing a 24% drawdown to that moving average, if not 33% downside to test those confluence of levels. And I know that I talked about that last week, the possibility of a 30% drawdown. So I think as of right now, that seems like the most likely scenario. However, looking over at the SPY, I think that this is a fake out breakdown. I think that we'll see a bounce. And so that might be reflected in SoundHound, but really, I think that's probably more hopium. And like this is going down to 8 or if not 7. So do be prepared for that. But anyways, as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Thanks a lot. Take care and have a great weekend. See you guys later.